Global oil inventories are rising, but price signals remain mixed. After a sharp spike last week, oil prices have cooled. Yet beneath the surface, the broader market environment remains largely unchanged. Europe is being described as tightly supplied, while extreme winter weather in the US has disrupted refinery operations and fuel flows. So, are inventories still telling us the full story, and what really matters for prices right now? To discuss the disconnect between inventories and prices, I'm joined by Alex Hodes, Director of Market Strategy at StoneX. Welcome, Alex.
Thank you for having me.
Of course. So let's start with this. Even though global petroleum inventories are sitting at a 4 year high as we head into 2026, prices, especially for middle distillates, are still holding firm. How do you explain that disconnect?
Yeah, so there is a separation with regards to the barrel of supply and demand fundamentals that are affecting each of those pieces differently. So in the distillates portion, par- particularly during winter times, we see diesel being utilized as more of a heating fuel, and that kind of takes hold. Diesel inventories have been relatively tight globally for the past several years. And this has just been due to kind of some refinery closures, the more tight, heavier sour crudes that are more distillate rich. But really, it's just been a kind of stability of, or a continued experience of having these distillate flows and distillate inventories relatively tight.
Mhm.
So you kind of see that tightness reflected more so when there are these big winter spikes and demand peaks. And that's why you're kind of seeing price move higher in distillates, but yet there is kind of an oversupply on more of the lighter end. So gasoline, NGLs, stuff along that side of the barrel, that the globe is really long those products and short the middle distillate products.
Well, Europe in particular is frequently described as tightly supplied in diesel, even when reported inventories don't look extreme. What makes the European diesel market so vulnerable?
So over the past several years, there's actually been some closures of refineries in Europe as well as the United States. So kind of the Atlantic basin has kind of taken a hit with regards to refining capacity. However, there has been more development of refineries in the Middle East and the Far East. So there's kind of this regional dislocation. And with Europe being the primary buyer of diesel and gas oil, they're kind of always net short diesel, and they tend to be the ones that are kind of setting those big price swings. They're the ones that are commanding those barrels of diesel there.
So let's stay with that then. How important is the location and the type of inventory right now? Does it actually really help Europe that global stocks are rising if the barrels aren't the right product or in the right place?
Yeah, so if globally we see crude oil supplies relatively balanced, and there are kind of just peaks of where demand is either spiking, inventories are tighter, and that has been particularly in the distillate range. So, Europe being the buyer of diesel tends to be affected by those prices more so than the rest of the country, or than the rest of the globe for that matter. But even if you do see kind of global inventories rise, we can see the overall crude oil market move lower and lower and kind of have a lower baseline, but still diesel's going to be prone to some of those price spikes. But it's really dependent on those middle distillate fundamentals.
Now, also, the recent winter storm in the US, which we were talking about before recording, has disrupted refinery operations, logistics, and energy demand. How meaningful has that disruption been for diesel and the product balance? And could it end up tightening global markets?
Yeah, I think you're seeing, so there is a, what's really important about the diesel market is that the NYMEX heating oil price is based in the New York Harbor. That is the largest contract for the US, and that's really driving the prices in diesel. So when winter storms kind of hit that New York Harbor, eastern seaboard side of the US, and you see peaks in demand, you see spikes in NYMEX heating oil prices. With uh, the primary heat generation source of the East Coast being gas oil or heating oil. So it you kind of see these deviations, and they take hold particularly in the winter, where winter heating demand kind of takes the lead. And although the fundamentals of diesel have already been relatively tight, these spikes in demand and then brief outages in the refinery complex have kind of compounded upon themselves. And then, not to mention, you throw in kind of the end of month contract expiration issues, and you saw diesel prices rallying up substantially. But now, as we rolled into February and the March contract, we're seeing prices kind of drop precipitously. So as soon as that winter storm came in, everybody was preparing for it, started burning more fuel, and also utilizing diesel for electricity power generation because we saw some freeze ups in natural gas. So it was kind of a perfect storm at that time, and then now we're kind of seeing the adverse side of that.
After all this recent volatility that we've seen, what do you think will drive oil prices in the coming months?
So I think we will still be prone to some of these demand peaks throughout the rest of the winter because of the tightness in diesel markets. However, I believe from a crude oil standpoint, the focus should be more on what OPEC does in the upcoming months. If there are any developments on the between the U.S. and Iran, and if that actually comes to a supply disruption, those are things to kind of pay attention to. But still, the major data sources and government agencies are still forecasting a major surplus for most of 2026. So I do expect that to kind of come to fruition, but we've been saying that for quite a bit, and it hasn't done so yet. But I would just maintain looking at those kind of supply and demand factors in the Middle East.
Understood. Alex, thank you again for your time. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.